All right, folks, welcome back to another fun edition of Top Trades Live. I'm here with Enrique. Enrique, you're in Arizona. So his feed is a little bit choppy, but he's coming through clearly on audio. So we should be able to get the most out of our time with Enrique today. We're also fresh off of our big Paradigm Nashville trip, which was a ton of fun. It was great meeting so many of you in person and having great market conversations and all that good stuff. Everybody I talked to had a great time, learned a lot, and as it always seems to be the case, whenever I leave town, something weird happens with the markets. We get a little bit of extra activity, and that was certainly the case on Friday with the whole Trump tweet with China fiasco, if you even want to call it that, that set stocks lower. And we got our hangnail, right, Enrique? I think that was your hangnail, right? The 3% down day.
Well, yeah, exactly. That's what Chris called it. Yeah, 3%'s not a lot in a market that's gone straight up for 6 months and sees stocks going up 100% in a day on no news. So
Yeah, maybe a little return to more normal market activity, we should say, but we are getting a little bit of volatility creeping in, which is good to see. I mean, selfishly, we've talked about how it would be nice if we got some sort of pullback here, and now we have earnings season creeping into the picture, which it feels like everybody's forgotten about with everything else going on in the world. And then we have the whole government shutdown thing. I think it's interesting. You've been talking a lot about how we should, at least in the back of our heads, mentally prepare ourselves for this shutdown lasting longer than maybe folks expected. And now it seems like the prediction markets, you posted something this morning about that. The prediction markets are starting to look a little bit beyond the longer estimates for how long this shutdown is going to last. How do you think this is going to play out?
well, look, I think the challenge is this, and this is kind of what I said when we were doing our top trades live on Friday at the conference. Chris said, "Oh, there's going to be a 3% pullback. It'll be healthy," and he wasn't dismissive.
Hmm.
But I think we're just at a point where sentiment is so overwhelming right now in terms of like we're right on the verge of a melt up and the great seasonality and everything's worked. And I mean, you all in a lot of our trades are making, you know, 20, 50, 100, 200, 300% in stocks in 6 weeks. And, like we saw this with USAR. And I guess my point is that this is for the late stage of a bull market, but it certainly isn't sustainable. So I think that what the issue really is that we're so far on one side of the equation that I personally will be surprised if we don't see something that's a little bit nastier in terms of a pullback. So, and the example I'll give, it's so funny, the Trump thing on Friday, when the pullbacks actually happen, it's just going to be some stupid thing. I don't like so this time it was Trump tweeting about sanctions. By the way, if the market was at its 50-day moving average and this had been 2 months ago, the market might have traded up on that. It's just so everything that's going to happen next, we're going to say government shutdown. It's government shutdown. We're going to say China stuff. All this stuff. I don't think it's really the case. It's just us burning off this exceptional overbought situation in the market. And I think it's going to have legs. I mean, I'll just be surprised. Let me put it that way. I'll say there's a 2/3 to 3/4 chance we see some real discomfort in the market and a 1/4 chance that this just lasts this week and goes higher. So that means keep your investments, but be, as we said the whole time, be aggressive, taking crazy profits. And Paradigm's been doing that across
Yeah.
the board. You all have been getting profit taking after profit taking from us for the last few weeks.
Yeah, definitely. And I think putting everything into context, like, and this is, we talked about this on Top Trades Live on stage on Friday morning. 3% is going to feel a lot worse than it is just because the market has gone straight up for 6 months. And I would be more surprised if we only got 3% on the downside after such a big move instead of just getting 3% and calling that a reset and then just marching higher. That would surprise me a lot more just because it's going to feel worse than it really is. And I think we're already kind of seeing that maybe a little bit, but even today, we have the Russell just turned green, the Dow just turned green. It's the bigger stocks in the Nasdaq. There's a few big names that are dragging us lower right now, but we're really not seeing the downside follow through just yet. And if we can get some mean chop and then more downside in the next couple of weeks, that wouldn't surprise me a bit.
Well, I'll tell you what the crazy thing is that, when you look at the market on Friday, sorry, yesterday, it was up a lot, but most stocks were down. And we've been in a situation where for the last 3 months, I really feel since September mostly, is most stocks that don't have to do with AI or metals and mining have trended down. And that's a statement of fact. That's not an opinion. The SPW has gone nowhere for several months, and most groups are down, some of them down quite nicely. JC Parrott's highlighted the home builders.
Yeah.
There's been energy's been getting smoked.
Hmm.
And the only things that are working, other than a few of the big AI stocks, are kind of speculative or not kind of speculative. The SMR stocks, the
Yeah.
quantum stocks, even these mining stocks. And look, we've been the biggest beneficiary with USAR. But let me just tell you something. USAR has no revenue. USAR has no actual operations. They own a mountain and they're building a factory. And the stock has gone from 14 to it was at 43 yesterday. And so let's just call it as it is. That's speculative. So what is concerning to me is when most stocks are not moving higher or moving a little bit lower, and the market's being led by, you know, stocks that are losing billions or mining stocks that are not profitable, that's not sustainable. Does it mean that USAR can't go to 60 in the next week? Yeah, sure, but that's not the kind of bets we want to be making. We want to make
Right.
sustainable bets. And I'll tell you something interesting. Today, and you said the tape's recovering a bit, but when I look at our and I'll tell you where I see it. My portfolios, when we go through these periods, tend to not certainly tend to underperform. And most of the things we've had in our trading portfolios over the last 3 months are down. A couple of things are down a bunch, but most of them are just down a little. Almost all of them are up today, even with the market down. So I just highlight this. It's this point where I say stay disciplined. It's so easy to get sucked in, but this is going to seem so obvious if the Nasdaq. I mean, let's just pull up. And I apologize. I've got a slow connection here, so I'm not looking at all the charts. I'm pulling up the Nasdaq. Um, this is the Nasdaq Composite. The 50-day moving average on the Nasdaq is with my slow internet. You know, Look, the 50-day average is 22,000,
Yep. I got
which is only about 2% from here. But I would target that 2150 range in between the 50 and the 100, which is another 5% from here. And if that happens, well, that's 23,000 to 2150. That's a good 5, 6, 7% move. That's where I think we can start to have a conversation. But I just think we're getting a lot of yellow flags at this point.
Yeah. Yeah, that's totally fair. Some really good questions in the chat right now. I think a big topic that's going to come up, especially if the market becomes more difficult over the next few weeks, is when to sell. John wants to know, like, so these rare earths have gone gangbusters. Like, how do you gauge on when to sell something like
Well,
this?
I mean, what I told people last week, and I said the same thing over and over. I said, one thing I would do when you're dealing with stocks that have gone crazy, crazy. Let's just be honest. There
Yeah.
was no news on USA Rare Earths and it went from 14 to 42. Is I say, if you had $200, let's say you had $100 in the stock, and now you're sitting on a pile of stock worth 500. Maybe it's worth 350, maybe it's worth 1,000. I don't know. I would be sitting on a pile of stock worth 100. So what does that mean? Take all your profits other than what you originally put in and let that ride on the crazy, because that is that critical metals. What's the ticker on that? CRML.
Yeah.
I mean, that's a perfect example. First off, that's a perfect example of an extremely speculative stock. So is USAR, by the way.
Yeah, sure.
We never said it otherwise. But CRML, my charts, I mean, man, that could be at 750. That could be at 10 and be a beautiful chart.
Sure.
Well, that's $17 from here, folks. I
Yeah.
mean, that's a 60% down move. So it is irresponsible to not take in 50 to 90% of your profits in something like this. And someone said something in the chat, because my internet's slow. They said, "Oh, I've been selling too soon." Trust me, the pain of selling too soon is literally 1/8 of the pain of selling too late. And I say that because the human body, they've done this neurological testing. We feel pain 8 times greater than we feel joy. So I can tell you exactly how much your body will neurologically feel the pain of selling too late. So, look, I would be on anything that you have on a stock, especially that's 500 up, 500 to 1,000% in the last 2 months. I would sell 80%.
Yeah. And I think it's important too, just to acknowledge what incredible circumstances we're in right now. Charts like this are rare. This comes along once in a blue moon, and we can't get into the thought of like, oh, this is just totally normal behavior, and this
Yeah.
is what stocks do. If you start thinking like that, then you start making poor decisions.
Well, can I say something though? Because I choose my words very carefully. I think most people, when they talk about charts like this and these stocks, they go, "This isn't normal. This is abnormal." I
Mhm.
totally disagree. I
Okay.
never say that. This is actually completely normal for this stage of speculation in the bull market. What I say is it's not sustainable,
Yes.
because there's a difference. Because I think someone who says this isn't normal may just dismiss the money making opportunities, and we haven't been, right. In cross paradigm, you have Chris has been crushing it. I've got my place. We've been taking advantage of it. But what we're really doing, and for those of you that couldn't join us at the conference, I did one of the opening keynotes. My first message to people, which I reiterated, is it's not what you make, it's what you keep. And so that's the most critical lesson in this stage of the bull market. It's the absolute best time to make huge returns, but it's also the riskiest to lose all of them. So again, and I'll even say this for the call options that are out there. If you have anything that in the last 8 weeks you're up 500 to 1,000%, I would book at least 50 to 80% of your returns
Yeah.
today. You know,
Yeah. I mean, there's no way around it. Yeah, I think
Brian Slocum, if you got something 300% too, I'd at least book a decent amount. Now,
yeah.
I'm not talking about stuff that's been up, for across 2 years. I'm talking that literally it's that CRML chart that I'm looking at. I'm looking at you, CRML.
Yeah. Yeah. Yeah, for sure. And again, I mean, I think I like that. I like the choosing your words carefully part, because what's the saying? It's only a bubble if you're not involved, or something along those lines. I know I butchered that one.
I haven't heard that, but that's actually a pretty good one.
So, where is your mind now that we're going into earnings season? Do you have any specific sectors that you're watching right now that you think are ripe for potential resets and trades that you like your particular style, or are you just sort of going with the flow here?
Well, I don't think earnings season's going to matter at all. Like, we went through earnings pre-announcement season. We really didn't see anything out there. And I think any real volatility in earnings we would have seen in pre-announcements already. So, the best predictor of future results is what happened last. I think earnings are going to be just fine. I don't think also, look, if the stock market's down a lot and earnings are fine, the stock market will rally on it and everyone will say it did it because earnings were fine.
Yeah.
If the stock market's up a lot and it overbought and it sells off and earnings are fine, everyone will say, well, it's sold off because earnings were just fine and not great. But the consistent thing is you went in overbought, you went in oversold. So I don't know that the earnings scenario really matters so much. I think it'll be good enough. But look, I just think all of these, I mean, AI and minerals are super risky right now, super risky. And if anything, as good numbers come out of companies and these companies report their lack of numbers, I think that you could see that reversion. And by the way, that would be healthy.
Yeah.
Like CRML at $15 a share or $12 a share is good for this market. CRML at $60 a share is bad for this market
Yeah.
in the short to intermediate term. I know that won't sound like it if you only see CRML, but that's how this process works. So I think earnings will be fine. I don't think it'll really matter. I am intrigued though by the government shutdown. People forget that government shutdown in 2015. Go pull up the stock market in 2018. Pull up the full calendar year on the S&P 500. So, okay, see that sell off? Okay, yeah,
Q4.
perfect. There you go.
Yeah. Straight
See,
down.
see that all time, see that all time highs on October 2nd,
Yeah.
and sell off down 18%. Government shutdown, folks. 35 days. The biggest government shutdown. What is the percentage there?
It's almost 20, 19,
20%.
19 and change.
20%. Yeah, it was one of those almost bear markets, right?
Yeah.
Um, so don't come crying to me if a government shutdown causes, a 10% sell-off in the S&P 500 because the preconditions are there. And look at that chart.
Yeah.
By the way, that chart, I mean, it sold off in January, February, not April. That looks a lot like the chart right now.
Yeah.
We were above that 50-day moving average a long time. So here's my point. I don't know that this is going to happen, but I'm telling you the preconditions are being set, and we are in a riskier spot right now than we were before. And for people that are new to the call, you'd be like, oh, you must be a perma bear. I'm the exact opposite. We were the guy table in April and May, and all I'm saying now is take your profits, put that money in your pocket.
Yeah. Yeah, definitely. Someone just asked in the chat, like, will the government shutdown continue to be a non-event? It'll be a non-event until it's not a non-event, I think is what
That's
Enrique's trying
exactly
to
right.
say.
I'm going to tell you, this is what's going to happen. Okay. The market's going to do one of two things. In all cases, I think you get more choppiness. Okay. In scenario one, the market kind of gravitates to that 50-day moving average and churns for the next 30 days.
And
And
that's
people will
ideal.
say, well, the market, that's ideal. That's the bull case.
Yeah.
The market's going to say, oh, the market's digesting the shutdown and earnings, which were good, but maybe weren't as high as expectations. Or the market's going to go to the 100-day, which is 5 to 8% on the S&P and 10% lower on the Nasdaq, and it's going to be all about the government shutdown and earnings,
Yeah.
and it's earnings just because they didn't beat. I'm telling you right now, it has nothing to do with either of those really. It just has to do with how overbought we are. But that's the thing when you get this overbought is you just get in these situations that the market. It's the same thing as oversold. It's exactly the same. I mean, I don't want to deviate too much here, but someone said we were talking about bear markets, and I'm like, I said I greatly look forward to the next bear market because we crush it in trading because 3 and 5 day moves in bear markets, or sorry, in stock market history, always happen in bear markets.
Mhm.
And so oversold really can tell you what's going to happen. So, look, I think that the government shutdown, you said it just right. It's a non-event until it is, and we'll see if it is. It has very little to do with the government shutdown and everything to do with the stock market technicals.
Yeah, they write the news stories in reaction to price, is what it comes down to. So
Journalists, I'd say journalists are not economists, but not like economists are any good at this either. Traders make you money. Journalists get you to click. I'm not even sure what economists do. Like they collect checks for writing BS.
that's that's fair enough. And keep in mind, like Enrique's talking about the 100-day moving average. That's this blue line right here. That would be all the way down to 63.60, 63.50 for the S&P. But in the grand scheme of things, I mean, even if we measure from these all-time highs set last week right here, that's a 6% drop. That's still a nothing burger, nothing sandwich, whatever you want to call it, right there.
And so this is the thing. What's funny too is you could see that if we get that 6% drop, I think look, a lot of stuff. Pull up Microsoft, and my charts are slow, so I can't respond as quick here. But Microsoft has done nothing. You know, pull up Apple. All of these except Nvidia and a bunch of AI names have done nothing. So the funny thing is, we could get the market to pull back 6%. Most stocks will be up, but things like these AI and minerals names will be down 30,
Yeah.
sometimes 50. CRML will be down 70, 60 in weeks. That's the crazy part.
Yeah. Yeah. Well, let's move on to a couple other asset classes because last I checked earlier this morning, gold was still ripping. Um, it feels like I'm taking crazy pills looking at this chart right here because it just won't stop. Every time I think we're going to get some sort of a pause or a stop, it just won't stop. Um, I'm sticking to my thought that this is a spot where we need to see some digestion, obviously. I mean, like we have round numbers of 50 and 4,000 now in silver and gold. We had a little bit of indecision this morning on this. Like, are you seeing this any differently than me? It's been a mind-boggling
Nope.
move, but it's got to drop.
I don't know if you can pull it up, but you may not be. But if you can find a chart of cocoa, can you pull up cocoa?
Hmm,
I'm not sure.
maybe I can give it a
I'm not
shot.
sure if it'll be on there. But here's my point. Commodities
There it is.
are okay. Did you get it? Okay, I'm waiting for it to pull up. Commodities and go back further on cocoa once you have it up there.
Sure.
Um,
Oh,
they
there we go.
sometimes get this crazy overbought, and what they always do is they go back down. And
Yeah.
so look at that cocoa chart back in the end of 24. I mean, the thing got super overbought and then went overbought again. And I was sitting the whole time just saying, dude, like, like this doesn't, it always reverts. And I think that's what's going here. So we've obviously been on the wrong side of the trade with Dole. We're likely to double down on it, to be honest, because
Yep.
the technicals work. I posted this to the Daily Feeder. I think they posted it. We are at a 91. We hit on the weekly RSI, a 91.8 RSI on gold. That's the highest in history, going back as far as we can. And like that always reverts. So I think you're right. I think you're right. And look, I think that, the funny thing is gold and minerals go down 15%, 10. Well, I mean, gold goes down 5, 10, and the mining names go down 30. The market might rally off of that. Other people are going to get destroyed, or people are going to take on real water. But I think you're exactly right. So we're just patient. I'm not happy with the loss in Dole, but of all the trades, I was literally thinking about this morning. This is the right time to double down, in my opinion. So we'll see if and when we do that.
I mean, even this I mean, what looks like a long-legged doji trying to form here in silver. We're getting some of that. We're getting some of that indecision, out there. So it feels like it's coming sooner rather than later, that we're going to get a harder reset. in the precious metals. And again,
Well, can I say something here too? Because people are mentioning obviously the rally in cocoa was driven by weather, but it's actually driven by a much more complex equation. But I'm telling you, the rally in gold is being driven by technical factors that are going to relieve themselves. You had short sellers on the other side, but here's the thing about a short covering rally. At some point the shorts are done covering,
yeah,
and then and I'm not saying there's real buyer, but again, gold's a meme stock. If you think that gold is not a meme stock right now, you're just 100% wrong. Like, that doesn't mean that's for the short term. Intermediate term, it's something different, but it is extremely risky.
yeah. And again, it's this all goes back to, I know we've talked about this a million times, and we kind of have to hold those beliefs in both hands there, with like, we can be bearish in the short term and bullish longer term on that. This is, tactically speaking, we're talking about a reset in
Correct.
in precious metals. A secular bull run, I mean, would still be well intact, even if even if the silver is down in the mid 30s. I don't think it would break this trend right here.
So John, with Rickards, I got no problem. I think gold goes to 10,000. I think it goes to 15,000. I think it goes to 25,000. I just think it goes to 3,700 first.
Yeah, that's fair.
But that's the difference. That's the difference between Jim and I, is we're doing tactical trading, but we also do long term stuff in other things. But yeah, I can't emphasize enough, when you feel like you don't own enough, when you feel like everything's working, when you feel like everything, is just so obvious, you're literally going to crash into the car's going to crash into a friggin' telephone pole.
Yeah, yeah.
Like,
Beware an easy
30
market.
years, 30 years of being on the front lines has taught me that. So that's why I sit here, and I don't think I sound doom and gloom, but like, I'm just like, guys, respect the market, and respecting the market right now means taking profits.
Yeah, and you want to be in a position of strength too. If we do get a bigger pullback, you're going to want to have the dry powder, obviously, for when the market catches and turns higher after, whatever the pullback is. Whenever the dust clears, you're not going to be able to be selling then. Don't put yourself in a position where you're forced to be selling when you don't want to be selling.
So someone here is asking about a specific call from Income Alliance. I can't opine on that. I haven't looked at the call, etc. But what I'm gonna get back to is what I said about USAR. This is what I would do, and it just stands for everything. It stands for uranium. It stands for all of this. Go look at things that you bought in September and maybe late August, and if you were up 500 or 1,000% on those, cash in 50 to 90% on SMRs, on quantum, on gold, on silver. This is for trading accounts here too. I want to be careful. Like, if it's just in a long-term account, well, if it's a long-term account, we got nothing to talk about. I think gold and silver are going to be great. You could lose money in the next 6 months, but you're going to make a lot of money in the next 6 years. But it's a rule. It's the same rule of thumb, because they're all the same stock right now.
Yeah,
Right? Gold is quantum. They're the same stock.
yeah.
And it's hard for people to understand that.
Yeah, you beat me to the punch there. That's not, Enrique's not being glib. It's when we say like, oh, that's the same chart. It's the same type of speculator involved in them. They've moved the same amount. It's the same trade. It doesn't matter if it's uranium or quantum or whatever. I mean, it's the same trade. It's going to react the same way when it starts going down.
The people that are trading open door are trading small cap mining and minerals stocks like friggin' demons right now.
Yeah. Yeah.
And so that's fine. That's how y'all, or how we, in a lot of these positions, have made 300 to 2,000% in 6 to 8 weeks. But let's just know. I love my nautical references. I was saying, like, you're a ship sailing in front of a hurricane, right? The wind is the best, and you're going to sail the fastest. But you got to remember, you better get to port soon, because if you're on the waters when the hurricane hits, it ain't going to be fun.
Yeah. 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 So switching gears here a little bit, crypto is getting smoked. Well, maybe not smoked. Crypto is down. today. We have Ethereum rolling over a little bit. It's down like 6%. It's back below 4,000. Bitcoin's down to 111. It's down about 3% right here. But curiously enough, the crypto miners are rallying again, which is interesting. Like we sold our Wolf trade on Friday. We actually sold it up here in the early morning when it was above 15, and it backed off obviously as everything sold off on Friday. But this thing is still marching higher today. It's up almost 9%. I bet you Mara is up today too. It is. Mara's breaking out above this level, above 21. I think this is really interesting here that these stocks are running. I don't know if you have a thought or two on that, because they seem to be trading places. When crypto is doing well, these stocks are kind of resting, and then when crypto has a down day, these are going up. I don't know if you think anything bigger is happening here. You think this is just a nothing burger or what?
Look, I think it's a lot easier to trade Mara than it is to trade Solana on Coinbase.
Yeah,
And so I think they have different constituencies. And the constituency that's trading the crypto miners are the stock speculators, who are the same ones buying nukes and quantum and mining stocks, traditional, physical world mining stocks. So I think that's the issue. I go back to CRML because I this move that happened here on the S&P on Friday, that was an engulfing candle, okay, where we were up and then reversed, and we kind of that's like a bad bruise. And yesterday's rally was pretty weak. I
yeah,
mean, we could hold this 50 day, but I'll tell you, by the week's end, we're just as likely to gap through it. I call it a 50-50. But my point is going to be about things like CRML and Mara and all these things going up today. Do you ever have a big bender one night and the next morning you feel terrible? But you go out and you like eat something, and for about 15 minutes you feel great, and then right after you feel worse than you ever did before. You know, I feel that's like what the speculative stocks are doing right now today.
yeah.
They took it on the chin. Then yesterday it was like, oh, it's all clear. So yeah, I'm as scared about this market as I have been in 18 months.
Woo! All right.
You know,
Yeah.
yeah, yeah,
I,
I'm as concerned. Like,
yeah.
you know, and I love the seasonals. I love all the patterns into year end. It's just, huh, it's just listening to people. Like a lot of what I do. So there's technicals in there, which I'm really governing most of what I'm doing with technicals. But like just listening to folks, it's just way too one sided. And so like I don't like these patterns at all.
Yeah. What makes me think that we're in for some more pain is when I was perusing social media and people talking about what happened on Friday over the weekend. Everybody was brushing it off as we'll be right back above 6,700 on the S&P by Monday at 10 a.m. because Taco Trump. That seemed to be the
Yeah.
prevailing sentiment. It's like, oh, well, crypto's recovering over the weekend. Like Trump's just going to back down or say everything is okay. And he already did, by the way. He already, attempted to patch that one up, saying everything is fine with China. But again, it wasn't about China necessarily. That was I thought that tweet was pretty innocuous. I think just the reaction to it, like you were saying, is just because the market's so oversold and everybody wanted a reason to sell and they got it or they made it up or however you want to look at it. But because yesterday's relief rally was kind of weak and now we're not really seeing any follow through to the upside today, yeah, we're off the lows. But at the same time, uh, it's not just snapping right back to the highs. And there was way too much talk about like, oh, this is fine. We're just going to go keep on jetting
So
here.
I have great news for everyone, though. Hold on one second. I got fantastic. I'm as scared as I've been in 18 months, but I got fantastic news for all of you. Go look at your brokerage account. I have a brokerage account of Fidelity, so I can go look at and I don't. It doesn't really. I don't put money into it. I mean, I guess most of the accounts I don't. There's some. I always have my 401k and all that. Go look at your brokerage account. Go look where it was on August 15th. Okay, and if you can, try to remember how invested you were on August 15th. And then look where it is today. And I'm going to bet it's a lot higher than August 15th. For some of y'all, it might be crazy high.
Yeah.
and just take profits. So then what happens is if you do that, you turn fear into you turn losing into winning. How do I mean that? Well, let's say you go right now, today, go to 50, 60, 70% cash. Well, you know what? If the market goes a lot higher straight away, well, you just made, as I said, your brokerage account on October 14th was a lot higher than it was on August 14th. Be happy. You made a lot of money. But if it goes down, be patient and then you can buy into it. And that's the funny thing. I actually wrote this on Twitter. I had one of my users, one of the chat boards, say to me, he was making comments about when would you buy the market. And I said, well, I would get aggressive on the market again in one of two places between the 50 and 100-day moving average, preferably closer to the 100-day moving average, and then potentially and or when the market's at new highs.
Yeah.
You understand that one, Greg,
Yes.
right? Which
Yes.
is like I either want to see oversold or I want to see this, consolidation and then back at new highs. Right now is the danger zone.
Yeah. Yeah. It's like you said, the 50-50 coin flip, right? You don't want a coin flip.
Yeah. Well, and one side, but this is my point is that having cash, like there's no downside, man. There's no downside. Yeah, you're losing, making the fact that you'd be up only 80% versus 90% on the year because you were patient for 3 weeks. No, that's a freaking win. And that's one of the things I say to people: never turn wins into losses. If
Yeah.
you make 300% in 6 weeks, that is never, ever. There's no scenario that is a loss in any way. I don't care if the stock went up. If you would have made 3,000%, if you would have hung on an extra day, and because if you get in that mindset, you're guaranteed to lose. That's a guarantee. So I would take this with young traders all the time. I'm like, nope, we book our profit, we move on to the next one. Like because you will tear yourself to shreds.
Yeah. Yeah, absolutely. We've got some chart requests I'm going to start ripping through here. A couple
Shoot.
couple folks are asking about Red Cat, our cat holdings. Um, this is a drone stock. It's benefited from a lot of press releases. I do own some shares of this that I've owned since.
They're in the press release. They're in the press release business. It's
Oh,
very profitable right now.
they are
This
in
is
the
one of the
press.
most. It's one of the most profitable periods for press. The press releases have grown to the moon.
But yeah, so I mean, like, I think this kind of fits in well with what Enrique was saying, where everything's kind of the same chart right now. This
Yeah.
this has gone
Look,
on a ripping run. If it breaks out above this consolidation, I like it, but I can see it just as easily coming down here and retesting $9-10 very, very quickly in a day. And I mean, I like how it's up here by these highs and resting right here. I don't think it's a sure thing that it's going to break out in this tape.
this is one of the least speculative charts I've seen. Which still on a speculation scale, it's probably a 6 or a 7. So I guess in that light, I'm like, okay, this ain't so bad. But you're coming off an RSI above 80, you're still at an RSI of 62, 12, $13. If the company were more like established and had real earnings and stuff, I'd even go so far to say is I'd almost buy it. But for a speculative stock, this is one that scares me the least probably of many of the things that we're going to look at.
Yeah, it's not parabolic, which is great.
Yeah.
It actually looks pretty darn normal from here. It is up, 40 some percent, so far
So I
this
guess,
month.
but to put things in context, I want people. I'm going to do this for every stock. So there's something called LTM in Wall Street. Last 12 months. Last 12 months revenue for this stock was $17 million. And by the way, the last 6 months is $5 million. So revenue's going the other way on the company. And it's got a $1.7 billion market cap on.
Yep.
So that's about 100 million per $1 million of revenue. When we get through, this might go on 6 weeks, the bubble part of the bull, 6 months. 16 months or 26. I actually like 6 to 16. Just don't forget things like this company just did 17 million of revenue in the last 12 months. It's valued at 1.7 billion dollars.
Yeah. Yeah. I don't wait a second. That doesn't sound like a press release. Give me a
Yeah.
positive press release with this thing. We need
they're
some.
they're probably that's probably at 17 million dollars. That's probably only like $1,000 per press release. So
Yeah, that's a good point. Maybe they need to up their game. More press releases. Let's see. Path was another one somebody put in here. Uh, yeah, I mean, it's gone up a lot recently, and I don't know if this is a recommendation somewhere, or not. I guess it's technically flagging here. It had a huge day where it was up almost 20% on Thursday, and then on Friday when the market turned south, it gave much of that back. It's still hanging on here to the bottom of this range, and this gap isn't filled yet. So I guess that's good. I'm not super excited about buying something new that looks like this right here. So that's my best take on a chart like this. Enrique, if you have anything else on this one.
well,
Mhm.
I've got a message of hope. This is a profitable company. They're beating numbers, and it's got really nice earnings revisions. So in every, we just went through three reasons that are worth 300. Why, in some ways, it's better than Red Cat. Um, I like all that. Do I think it's likely to see 14, 15 before it sees 20? Probably. But the fundamental setup is, and it's as I thought. Go pull up the 5-year chart. This is an echo trade.
Oh
It's
yeah.
an echo
Look at
trade
that. Look
with
at
really,
that.
really nice numbers. So here's the thing. I get on this thing. I'm spewing fire and brimstone and bearishness. And the first name, I'm like, yeah, it's okay. This one's, actually kind of attractive. So I think you got 10% downside, 10, 15% downside, 20, 30% upside, and they've been crushing numbers. So this is actually a reasonably constructive.
All right. I
I don't
like
know
it.
that I'd be going all in at 16, especially with the chart already pulling back.
Yeah,
But
that's
I think it's a pretty interesting setup.
yeah. I mean, it could be worse. Let's see what's on F slide.
Which one? Fastly?
Fastly.
Yeah.
This is I don't hate it. This is another basing out a chart that's basing out. Is this an echo trade? I don't know if it meets your criteria, Enrique. Um,
No, this is nice. Like was it Zach? This is an echo trade.
yeah,
I think Zach recommended this on up at the presentation. The company has been beating numbers nicely. I'm looking at it's got a big story. Like I'm now looking at the revisions. Um, it looks like revisions, we're going down, but it bottomed. Bottom for 7, 8 months. I would buy the stock.
yeah.
I'd
I
actually buy this one right here.
I like it October
Just
9, but I like it here. Yeah, absolutely. Get some green
yeah.
there.
Your difference between my style and your
Yeah,
style, right? It's
yeah,
like
exactly.
I hear it. This one's I gotta say I'm impressed with everyone. I don't think you're cherry picking these because I can't. I'm slow internet today.
No, I'm
So
just
far, people
yeah,
people have not been giving us the most speculative stuff. They're getting better and better. So
yeah. Let's see. What's it? TMRC. Do I know this one?
this is one of the
Oh,
this is one of the playgrounds.
gotcha. Yeah, it's in the nosebleeds here. Could go higher. I don't think it's a high probability bet at this juncture. I wouldn't touch it, but I mean,
I
like,
would try, yeah.
this is a feed the ducks spot.
I wouldn't touch this. Bless you if you made the 100, 200% return. Look, it could go up 500% in the next week, but in all scenarios, it's headed back to sub $2.
Yeah. All right. Hood. I've heard of this stock. Um,
Hood.
Man, I think it's a little vulnerable up here. Um, this is and put it all into context. This is a stock where there's a lot of people holding it. It's been a big winner this year, huge winner off of the April lows. How low did it get down here during the tariff tantrum? $30, and it's at
Did
100.
it get to 30? Holy cow.
Yeah, it did. It got to 30 on Monday, April 7th when the market bottomed. It's at 140 right now. you guys know I mean, I still have half my position. I sold half of it at 100 back here in July. I was just becoming unwieldy in my big portfolio. I love the stock longer term. I would want to add back maybe at $100 if it drains down to there over the next few weeks if it does get some downside. And that feels like a lot, but on this chart, it's not much. 103 is the 100-day moving average. So I mean, like it's
I
entirely possible.
I like it. I'm still bullish on crypto. I actually don't mind the little shakeout that's happened, but I'll go something else. If you like hoods, you should buy coin.
Okay,
I recommended this one at the conference, for stocks for the melt up,
that's in a nice
because
spot.
if we get a melt up, coin doubles or triples.
Yeah, yeah, for sure.
But so I like hood. It's extended, but if you're going to buy hood, I just buy coin. Mind you, I think hood is a better company
Yeah.
on a lot of levels, but
No, I like coin here a lot. I think that's a good play. It can go fast and um I mean you can be back at 450 in a big time hurry if we see crypto catch and move higher, at some point later this month into November. Speaking of which, Richard's asking about ETHT. Uh I like the shakeout we're seeing in crypto right now. I think it's possible we go a bit lower, but I sold half of my levered ETH position. I think I have ETHU, but I sold half of it back here in this run up back in July, and I'm still hanging on to that other half. I might add if we drop a little more in Ethereum because I think that if this market does do a quick dipsy do on us, I think that'd be a good opportunity to add to this because it's going to rip higher into the end of the year.
I love ETHT here. Like this is my favorite of all of them. Fastly's interesting. Coin is interesting. I think this has the chance to be, 150, 200 by year end. And, again, I'm impressed. Like, I'm glad people aren't showing me stocks that look like CRML. But I think this is absolutely an ad, and we very well may add this to the Maverick.
Yeah. Oh, somebody wants to see the dull chart. I mean, it looks exactly like you think it looks.
Which chart?
The dull chart. I mean, like that's what it looks
Oh,
like right now. But I mean,
yeah, yeah,
it's a 3x inverse leverage ETF.
yeah.
So I mean, it's been going down a lot when as gold has gone up. It's extremely stretched to the downside. It's just I mean, it's reflecting what's happening in the markets right here. I'm very
Just
tempted to
inverse of
scoop
gold.
scoop some of this up right now. Very tempted to scoop some of this up.
Well, I get back to one of the reasons I like it, which isn't I would have put it on if this is not, even if this isn't the case. A lot of our readers own a lot of gold mining. And
Yeah.
so when those stocks have their correction, and they're going to have a correction because the miners are up 300% in
Yep.
6 weeks, this thing's going to fly. That's not the reason to own it. Like I like it because we don't own any gold mining in the Maverick. But like I said, I'm tempted to double down. I'm tempted to double down on this and buy ETHT also.
Yeah.
Like those are two trades I really like.
I think JC Peretz on Thursday at the conference mentioned that GDX has had its best year ever as of right now, or was it best trailing 12 months ever? I don't remember the exact stat, but it's been a heck of a year for gold miners, either any way you slice it.
Well, I do want to make one comment that you're going to hear at some point in the next 6 to 12, 18 months. I, and this gets to, let's get to, I couldn't make the Bitcoin debate between Jim and James, but there's a funny thing about gold. When the price goes up, the supply grows because do you know how much gold we have in the planet's crust? Pretty much like infinity. there are millions and millions of tons in the planet's crust. It's just really expensive to get to.
Yeah.
So I got to tell you, like with gold at 4,500, there's going to be a lot more gold, and gold supply has grown 1 to 2% anyway. So guess what? Gold's going to be coming out of the woodworks. And I only mentioned the Bitcoin thing because it doesn't matter how high Bitcoin's going. We're not mining into the crust of the earth to get more Bitcoin.
Right.
You know, So I will tell you, at some point you're going to hear that narrative that all of a sudden, and that's by the way, when the miners get smoked, that's going to be the problem. So I just, man, I can't emphasize enough. It's not this easy. Whenever it's the easiest, it's about to get the hardest. And just respect yourself and take some profits.
Yeah. Yeah. Great advice as always. Next up is Uber. I've been talking a lot about Uber. Um, I would I was talking about this a couple weeks ago, 1 week ago, 2 weeks ago on the call, and I said I want to see it hold 100 because it keeps on knocking on the door. And then late last week, ugly candle on Thursday, and then Friday followed through to the downside. Just needs some more time here. I mean, I think it's a great stock longer term. Um, from a trading perspective, I want to see it cross $100 before I get too excited about it because it's had so much trouble there since the end of September. So that's my tactic.
And the opposite between our styles. I really like this here. And
I like your
Uber,
accounts. Yeah.
I'm trying to think. What someone else recommended Uber at the conference, but Uber, if you ask me, what are stocks you could buy for a melt up that could be up 50, 100%, and you can sleep well at night? Uber's absolutely one. I mean, the whole Uber to me has the potential to be a 500 or $1,000 stock.
Yeah.
And because their market, so Uber has got a 200, let's put that in context too. Uber's got a $200 billion market cap. Okay, the company's profitable, cash flow generative. By the way, back in the day, Whitney and I put a sale on Uber. We said it was going to go bankrupt, so I got that one wrong. But I just think it's a huge story. And if we get into the melt up, a true melt up, I'd rather. I mean, look, little speculative money losers are going to lose money, but you make 100% on this, and this is a company, crushing it, making a ton of money. So I actually like Uber here too. Again, I'm surprised. All are making me more bullish, by pulling up things that I'm actually pretty constructive of. I just get so tired of, like, I'm just out all day long on CNBC, which you all know I love CNBC. It's just all like quantum and nuke and
Yeah.
critical minerals, and so it feels kind of I don't know, ick.
Yeah. Yeah. No, I hear you. Yeah, that's where the noise is coming from right now. But yeah, some of these charts, they're setting up pretty nicely. Let's see.
Yeah.
I got another one. A couple I'm not familiar with here. Maybe you are. Let's see. Somebody's asking about ACM. I don't know this stock at all. Engineering and construction here, 17
Yeah,
company.
I haven't looked at this company in years.
Nice
Let's
chart.
take a look. I mean, this is the kind of name that longer. That's a beautiful chart.
Yeah.
This looks like a compounder, a grinder.
Hmm.
I recall the business. They build stuff. I like building stuff. I mean, the 5-year chart is to die for.
Yeah.
Let me pull up the money chart, which is the earnings revisions. Earnings revisions are, eh, you know, okay-ish. These are quirky businesses because they whatchamacallit. There's a with the contracts, they earnings revisions bottomed out about a year ago. Company has been slow internet beating numbers consistent. I like this one a lot. This is a great grinder. I don't think you're going to 5 times your money, but I think you could compound at 10, 15, 20%, maybe more,
Yeah. I mean, yeah.
and a little bit of dividend yield.
Again, constructive charts in when a lot of the other stuff that we were talking about earlier
Well,
were
so,
crazy. That's nice.
can I get? But let's bring it full circle. This is what I was saying before: is that the market, the garbage has been flying. The rest of the market's kind of been chill.
Yeah.
That's what actually you all want to know what has me the most scared. It's exactly that is quality companies. They still have constructive intermediate term charts, but have rolled over and have been struggling for 6 weeks.
Yeah.
And absolute garbage. Companies that I did I post this list the other day? I think I posted a list. I should update this. Hold on. I posted we posted the daily feed. I think I posted to Twitter. It was all the stocks in the Russell 3000 that were up the most in like the last 3 months. And like 85% of them didn't have earnings. But I'm going to point out here. I'm finding it. But I'm going to point out something else. that is crazy to me. Okay, here we go. Russell 3000 stocks up 400% since April 8th. I'm looking at a chart of 20 of them. 16 of them have a negative PE ratio. And I'm going to tell you something crazy. Of this group of 16 companies, mark it here, 2 years from now, I will revisit this on whatever top trades is closest to October 14th. I'm going to guarantee you half these stocks, well, I'm going to say 80% of these stocks are down 90%, and a quarter of them are bankrupt. And that's what's scary to me.
Yeah.
That's the kind of stuff that's leading the market. And it's where we're all crushing it. It's awesome. Make all that money. But like this is what scares me. I'm going to do another crazy analogy. I'm sorry, I'm amped up about this, but it's really concerning. I remember this happens every stock market bubble that we get into this. This is like NFTs, back in 21. But I'm also going to give you a reminder is like in 2007, 2008, I remember hearing stories of people like going to contract on condos in Miami, and then they would sell their actually bought it. They'd sell their contract on the condo in Miami for like 100% gain, and it was just like, and people were just like, oh, real estate never goes down. It's you can't lose money in real estate, can't lose money. Everyone needs to live in a house, and it's just when you get that level of hubris, that's what I'm seeing seep into the market. And so what do we do in the face of hubris? We stay disciplined. We
Yeah.
take profits. We buy good setups. We avoid FOMO. That's the thing. That's what I said earlier. That will kill you. We don't turn victories into losses, you know. But yeah, this chart, I don't. We don't have a way to put images in there. But I'll take a link. I can put the link to it.
Nice. All right, we got a couple minutes. I'm gonna rapid fire some of these. ACHR, that's flying cars, right? And actually, it's funny. Again, like, yes, this is a very speculative stock and a very speculative tech basket right here. And it looks pretty constructive here. It hasn't gone, completely vertical like a lot of the rare earth stuff and everything else. It's bumping up right against this nice level here. Third, I love it above like 1350.
Yeah, yeah. It's funny is like because I have to watch. Well, I'm just overwhelmed by CNBC. I'm not overwhelmed by CNBC, but a lot of the speculative stuff that if it's not in SMR, direct AI, quantum computing, or minerals, the charts look pretty good.
Yeah.
Like constructive. That makes maybe I'm getting a little bit more constructive in the market, although I still think these garbage like Oklo is going to go down 50% in the next potentially before year end.
Yeah. Okay, one last one here. PayPal. I haven't looked at PayPal in forever. So
Some
I
good
don't,
stocks people are pulling here.
I
I'm
don't,
I'm I'm happy to not. Sorry to say this. I'm very proud of you all that we're not getting 40 like $85 million market cap mineral stocks that I've never heard of. Like that speaks to the quality of what our people own.
yeah, yeah, totally. I'm not super keen on whatever happened here with this nice run from 67 to 77 that immediately retraced back down here to the bottom of its range. But it looks like it's trying to hammer out something. I wouldn't be too ecstatic about this heading into earnings. I don't know what earnings revisions look like, Enrique.
They bottomed a year ago. They've been grinding higher. Uh, company, I mean, companies, the company had a run of missing numbers for 2 years. They've been beating numbers here recently. Uh, it's kind of interesting. I hear you. I agree. The chart doesn't look great, but company's got pretty steady growth. I put this in a like category. Certainly not. I'm not unlike mineral stocks. I'm not screaming sell because you're about to get your face ripped off.
Yeah.
I'd be constructive on this.
All right. Yeah, that's fair. All right. Final thoughts. Play it safe out there. Take some profits. That's been a good theme
Take
of
some
this call. Take some
profits.
profits on the high flyers. Why not?
You know, Here's the thing. if you got $10,000 of mineral stocks and quantum computing in your pocket, you probably feel real good right now. You just made it. You probably started with 2,000. But I'll tell you what, if you had 8,000 of cash and $2,000 worth of quantum and mineral stocks, you're going to sleep a lot better, and you're going to be a lot better positioned for what comes next. So that's my get you to sleep at night well. And last thing, I said it a dozen times at that conference. It's not how much you make, it's how much you keep.
Yeah. All right. We'll end it on that. Thank you for joining us from out west, Enrique. I really appreciate your insights as always. And be sure to tune in next week, folks. Another top trades at 11 a.m. on Tuesday coming at you then. Talk to you later.
And appreciate everyone being patient with my signal, which maybe wasn't great. So
All good. Talk soon, everybody.
thanks everyone.